What's going on, everybody? Welcome back to a brand new episode, and today I'm going to be explaining what stock market bubbles are for beginners. So this is going to be quite an interesting video, so if you like informational and informative videos on the stock market, please do subscribe because I upload them every single day. Loads of videos on stocks already on the channel in the Stock Market Explained series, and loads of videos on the channel in general in many different playlists, so please do check them out anyway. I'm going to jump straight into this one. So stock market bubbles. So to be basically exact from the set off, it sounds like a great thing and a fun thing when you think of bubbles, but basically the principle behind stock market bubbles is that the stock is a bubble, and it's just like when you blow a bubble up, basically there's only so far you can blow a bubble up to, or rather a better example would actually be a balloon, but there's only so far you can blow a balloon or a bubble up to where the balloon will actually burst. So a stock market bubble is similar to a balloon in real life, or even a bubble in real life if you blow one of those and it just gets too big and it bursts. So there are actually a few stages of this, and we're just going to look at a few of them here. So we're going to start off with the bubble cycle. So if you see a little bit of writing in the left hand, that's because I'm making a video tomorrow on Tesla and if it's a bubble stock. So if that sounds good, please do subscribe, like I said, because Tesla bubble stock, is it a bubble stock, is coming out tomorrow. But yes, we're going to jump into the stages of a bubble cycle first. So simply put, the first stage is just pure excitement. Now this can be for many reasons. Now if we talk about an individual stock, then perhaps this could be something like the company's released a new technology, like I was saying about Tesla, new video about that coming out tomorrow. But for example, people have started wisening to a new technology, like an example like I just said will be Tesla, electric cars of the future. People are wisening to it, they're investing in the company for the first time, and that's basically sparking some new movement in the stock. Now another example for the whole market, so sometimes we can have a bubble stock, or we can actually have a bubble market. So if it's a bubble market, an example could be something like lowered interest rates from a country, sorry, or something like that, something which will basically accelerate the market and make things look a little bit better for the general market. So yes, there are a few things that could trigger this excitement, but overall this stage is just pure excitement when people are happy and looking into the new thing for the first time and finding out what's good about it and finding out that they should actually look into it and start putting money into it. But that's the very first stage of the bubble, and we're moving on to the next stage now, where stage 2 is actually the boom. So we know how this one works because we've seen it many times in the past, but basically this is a part where it starts to move slowly at first. So we can imagine slow move because not a lot of people know about it at first. But as the bubble quickly forces prices up, over time, more people get in. So for example, people want to make that profit, so they get in on the boom, they see the prices rise a lot, and they want to get in on it. So this is one stage of it, but there are actually a few stages past this which are slightly more important, but the boom is basically the biggest part where the thing is at its peak and most people are in it. So this is one of the most important parts of the actual whole cycle because the boom is one of the most influential things. But moving on past the boom is actually the euphoria. Now this is a thing that a lot of people, especially in day trading, actually fall into, or even swing trading for that matter. But yes, euphoria is basically the stage where investors stop worrying about what the risk is of a trade or something or an investment, and they just throw all caution to the wind, and this results in them throwing all logic out the window as well. So basically what happens is they basically move prices up even higher for no apparent reason. Now we've seen this in certain stocks in the past. This is basically like a Wall Street Bets example of a trade, for example. So if you've seen the last video on Wall Street Bets, you know exactly what I'm talking about. But yes, this is that kind of stage where people aren't very concerned about the risk that it's just going to come with something, and they just all go in without knowing the logic. So of course this is coming towards the end of the cycle, however there are still a few more stages, but this is basically the last of the good parts where things are still looking up for the stock. So you can see here how a lot of people can get in here thinking, oh, well, so for example Tesla has risen 800 and 900% this year, so I can jump in on that, and then for example the stock might crash. Now I'm not saying that Tesla will, because I'm saving that for tomorrow's video, but this is an example where it could happen. So yes, a bubble and euphoria are two things which fuel each other because people want, well, the masses at least want to make a lot of money without all the knowledge that they might need to jump into this one. So the masses basically fuel this one, especially in modern times, well, with the invention and the overall higher level of use of mobile investing apps for people when you don't actually have to know a lot of stuff to jump straight into investments. So this is basically what fuels the stage as people wish to make more money, so they don't look at the risk and they just go straight into it But then we're going to move on to stage 4. So stage 4 is a sell-off. So this is the first part of the sell-off where sellers start to take their profits from the investment. So basically, some of the smarter sellers can see that the bubble is going to end. So this thing can be triggered by many things. So like I said, basically what's going to happen is the bubble is looking like it's going to end, and this means that smarter investors are going to take their profits now before it actually does. So the downside of this stage for the bubble cycle itself, this is where it all starts to go wrong for it, because basically what happens is the smarter of investors are going to take out their investment money and basically take the nice little profit, leaving other people still in the trade. And obviously when the sell-off happens, as you will know if you look at analytical trading, when the sell-off happens, basically what happens is the prices go down, and this leads straight into fear for other people in the market, because they see the prices come down and they think, oh, well, I don't want to get caught out in a loss. But what that does is it just leads to a lot of people selling, which forces prices even lower, as you know. So that leads us straight into the actual crash. This is where panic ensues the market and panic attacks the market. So easy to understand this one is. Basically what happens is panic just comes through the market, like I've just said. People get scared, people get fearful, they see prices start to fall and fall and fall, and all this does is it just fuels prices going down even more, because people don't want to wait out and see the investment. Well, that is the masses at least. So if most people aren't waiting and willing to see the investment plan out and see how things go, then that's going to force prices down, because people are trying to get out as fast as they can and no one's really getting in. So supply demand is basically, there's a lot of supply but little demand, because obviously, like I said, a lot of people are selling out, and this is where the bubble basically pops. So that's the unfortunate stages of a bubble cycle. Like I said, this is going to be very important to people who are watching tomorrow's video on Tesla, as I'm going to be making that one. But yes, these are basically the 5 main stages of a bubble cycle. So if you are trying to predict a bubble cycle, these are some things to look out for. However, it's very, very important to note, things every single time are going to be different round and round again. So while this is what generally happens for a bubble cycle, it's not necessarily going to happen, and things can change all the time. And what that means is it's going to be risky for you finding out what a bubble cycle actually is. So if you're willing to get into the trade, which might be a bubble cycle, just know the risks that come with that now you've watched this video, and I hope you found it informational and useful and quite fun as well. So if you did manage to enjoy it, please do leave a like and subscribe. I would appreciate that so much, because we've got so many great videos coming in the next few weeks. But yes, if you enjoyed, like I said, please leave a like and subscribe, and just view out any of the videos which will be coming on screen now, and I will see you in the next episode, which will obviously be out tomorrow on Tesla. I'm sure a lot of people will like that one, so please do watch it. Goodbye for now.